of March. Busy week ahead. Let's go ahead and get started and kick things off today. I'm just going to jump into the chat, see how everybody's doing, say hi, say hello, happy Monday. All right. Nice to see everybody. Let's get started with the risk disclaimer. We understand there's risk in trading. Please and always use trade capital only. Do not trade with money you can't afford to lose, whether you're trading stocks, options, forex, cryptos, futures, whatever you're trading. You know the risks. All right, let's get into the charts. So a couple of things. First and foremost, news this week. If you can see the economic calendar, big news I'm focused on this week is, we should know this, Wednesday. All right, we have CPI data coming out of Canada, but all eyes probably this week will go on to this news event right here. And in fact, I'm just going to highlight this in green and thick green right here. The FOMC economic projection, the statement, the funds rate, the press conference, that is what the markets are looking at this week. You can see on the economic calendar, they're forecasted to raise rates to 0.25 to 0.50. That's going to be the window that the Fed has rates. And we've seen we've been using this FedWatch tool from the CME and watched it fluctuate for the last month. I think we've officially settled in on about a 96% probability that the Fed is going to raise rates 25 basis points. Whether that's to get the market started on this tightening cycle, we're of course going to watch and see if that acts as a catalyst for the rest of the market this week. Are we going to have a relief rally? Is it more pain to the downside? We've had consecutive weeks bearish. Case in point, last week, market movers, Dow was down negative 1.99%, S&P was down negative 2.88%, NASDAQ takes the brunt of it, negative 3.53%. Bitcoin also still range bound, trading at 38,920. That was as of, I think, yesterday's close. Year to date, pretty interesting. The NASDAQ is down almost 18% for the year, negative 17.90. The S&P is down 11.79%, and the Dow 9.34% to the negative. 10-year notes up to above 2%. Bitcoin is down for the year 18.47. Oil, of course, I've got the close here from last Friday, 107.65, but we know highs were nearly at 130. So oil's up well over 40% for the year. And we still are wondering, is oil going to keep moving? Is our commodity prices going to continue to escalate? We will find out. Lots of volatility in that arena, but energy stocks continue to be kicking some butt. If you're watching sectors, for example, which we do in the trading rooms, let's go year to date on some of the sectors. Energy is going to be a standout all-star this year. Check it out. 38.47% of the 11 sectors. Which one's positive? Energy. The good thing is we talked about this last year. We were ready to get positioned in energy, in financials, in some of the value stocks that would hopefully, shelter us from some of the volatility, and we have. The broader market is down, and every sector is down, except energy is absolutely crushing it. So crazy stuff, right? And we'll find out what happens this week. So get into the markets. The SPY, we're trading pre-market 421.88. Today's candle, tomorrow's candle, I'll watch. Chart alarms are set for a reason. Are we going to break any highs or lows? I'm not sure, but something I'm watching. Talked about this a lot last week in the trading rooms. Are we going to continue to see this type of decline? Are we in a channel to the downside? Well, we'd say stocks across the board are vulnerable to the downside. If the Fed is going to drop the rate hike this week and the market doesn't like it, doesn't digest it well, then perhaps we come down, strike these lows, and we start heading into the 400 level around the SPY. All right, so that would put us down. We're already in a hole for the year, right? We're down nearly 12%. So from high to the Ukraine invasion low, that's around 14.26%. If we break these lows, we're starting to creep up to 15. I'm curious where 20% takes us. If we get to 20% down for the year, that puts us around 380 for the S&P, or for the SPY rather. So that's what I'm looking for. But one thing I noted, and let me find that chart. Something like this in a short-term relief rally. This is using the current S&P 500 compared to a window here between March 2018 and February 2019. Now, March 2018, actually 2018 in general, was Fed was raising rates, all the way into the end of the year. Now, when they raised rates end of the year, that is what happened. We had a rally up here and we fell from December 2018 all the way into February 2019. So this is suggesting that perhaps we're going to see some type of short-term relief rally before the market officially prices in that final rate hike cycle, maybe later in the year. But with all the geopolitical tensions and uncertainty with Russia Ukraine, we're now 3 weeks into it. That might be a hard sell for the market, right? We might be fading all these rallies, selling all these these little pops in these 2-3% days that don't take out any highs, that don't really change any structure, and we just continue to see some downward corrections. So as I maintain, my narrative is trade energy, trade financials as rates are going up, trade commodities, stick to value, right? And then in Forex, we've seen an interesting mix this year in Forex. We've had, this last week, the Japanese yen was extremely weak. We've had a lot of volatility around the euro pairs. The dollar, we're going to take a look at the dollar here in just a little bit. But we've had, decent volatility. Commodity pairs like the Aussie, New Zealand CAD have performed very, very well, even alongside some of the safe haven flows that we've seen. So it's been a mix, like I said, in Forex compared to your traditional kind of poster child risk on, risk off trading. And a lot of that is because of our elevated commodity prices. All right. So we'll see. I mean, this week is going to be important to watch. Set your chart alarms. Okay. In fact, if you'd like to join me live on Wednesday, I'm going to host a special session at 2 p.m. Wednesday. You can check it out on the YouTube page, youtube.com/Chris Pulver. 2 p.m. We'll go live. It'll be right when the news hits. We'll be taking a look to see, what is the statement. There's a press conference with Powell at 2:30. I just want to see, what happens, intraday, whether we have some dollar movement, whether we have some stocks movement for the afternoon. We will find out, but it'd be fun to kind of trade it together and see what's going on so we can digest everything and make some good decisions. All right. So that's really the focus this week is the news. FOMC on Wednesday expected to raise rates. New Zealand GDP, Aussie employment numbers. We have a rate decision also coming out of the Bank of England. Official cash rate decision is expected to go up again. So Bank of England looking to raise rates another 25 basis points with a unanimous decision. So that'll be interesting to see if the pound gets some love this week. Trying to think. It'd be nice to see a recovery on something like pound Aussie, pound CAD. If commodity prices take a little chill, then pound could be a good recovery against those. I especially like the pound Aussie, pound CAD, pound New Zealand. Maybe not a big correction as far as reversing, but let's say several hundred pips after we've had nearly 1,000+ pips to the downside on some of those crosses. So we'll take a look at that in a little bit with some of those pairs. And that is about it. We have BOJ as well on Thursday to Friday. Retail sales out of Canada on Friday. But the big news, of course, like I said, Fed on Wednesday. And then piggybacking that, not to be outdone, Thursday, Bank of England with another rate hike at 25 basis points. All right. Okay, anything else? Trying to think for sectors good, SPYs good. This week is going to be a crazy week in equities on demand. So anybody that's in my trading room, I just counted up over 30 expirations this week. Now, it's not all bad. Most of them are covered calls, to be honest. In fact, I have one. I'm just going to count out like credit spreads and potential assignments. There's not very many, but there's a few. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17. So about half my expirations are credit spreads. Most of them are looking in pretty good shape. So I don't expect to take a bunch of assignments, but I have a lot of covered calls that once they're done, lower the cost, start to repair, continue to repair on some of the stocks that I haven't lost yet. Last week, took a nice chunk of profit on an SLB for $7.40, lost the stock at $42.50. Campbell Soup took some assignment on. So anyway, busy week in stocks, setting tons of chart alarms and just monitoring everything. Probably not going to take a ton of new trades. We've already staggered some trades out to the next few weeks into end of March, into mid-April or so. And I think this is going to be a massive week to see where the market wants to go. I keep calling this the pre-summer push. It's important. A lot of times we have this bullish bias going into April and May. If the market's going to offer a relief rally, then it would make sense that we're getting somewhere up into this vicinity on a relief rally, right? So I've said this in class. I mean, if we come back to like 450 or 460 on the SPY, I think that could be this little relief rally that everyone gets all excited and happy about. But because we have some structural damage done, this could be a really nice topping pattern where we come back for a relief rally, we go sideways for a while with additional volatility, and then the market continues to correct. Or we come all the way back up to the highs again, and we correct. Okay? So I think the market's going to have a heck of a time breaking the highs. The highs we established early in the year, I think it's very difficult to take those out. Are we vulnerable to the downside? Sure, we can keep sliding lower, and then every little bit of effort would be if the market's going to try to find a low and rally like crazy. I mean, it's going to come with just wait for a trend line to break. Wait for this channel, wait for this trend line to break, and then you can start looking at bullish positioning. Let's say we're 15 to 20% down across the board. And again, it doesn't mean that there's a bottom at 20%. Doesn't mean there's bottom at 15%. I mean, we could see what was artificially engineered in 2020 with a recovery post-COVID. We could go 50%. All this amazing like asset inflation. Well, we could lose 50% of that value, and it doesn't matter. That's just what the market does. The market's not a true reflection of the overall economy. It's not a true reflection of every company. It is a sentiment-based, psychologically based, greed-based instrument that you learn how to trade it, you can make some money. But I'm sure there's an interesting mix of traders and investors that are doing very well in this environment and some that are not. Because it's certainly not just your traditional portfolio for the last 5, 6, 7 years, 3 years even, is getting crushed right now. Anything that's tech heavy and tech concentrated is terrible. All right. So you have to have some type of rotation in there. I put videos out on sector rotation in my channel. So again, check them out if you're wondering what the heck's going on. I mean, there's a lot of stuff we can trade. Okay. Daniel says Amazon sure is ordering a lot of Volvo semi trucks. It's interesting. Are they electric? uh, You deliver, yeah. I mean, who knows? Or they're just ramping up or they're ramping up distribution. I saw that FedEx and UPS have like double and triple profits than expected, but they also splurged on hiring new workers because they've had so much demand to try to keep up. So anyway, let's take a look at the charts and get after it here for the next like 15, 20 minutes. So pre-market, we're a little bit up in the SPY. Pre-market, we are slightly up on the Dow. Pre-market, we are down. Interesting. So we're up on the SPY, up in the Dow, and slightly down on the Qs. Okay, again, like tech is on its back. It's it's on its heels, backpedaling a little bit. We've got the volatility index at 3111 from the close on Friday. See if we have any pre-market on the VIXI and the VXX. So the VIXI pre-market is down by about 16 cents. VXX pre-market is down by about 15 cents. VIXM 34.72. I do have an expiration this Friday for a covered call at $34. If it stays where it is right here, I'm going to lose the stock for a $4.30 profit. I'm totally happy with that for the contracts I have. That's again playing volatility. SVXY. This one, I just own the shares, and I own the shares around $52. I'm trying to lose it around 55 or 56. I have a covered call, I believe. Let me check my expiration here. SVXY. Oh, it's out to April at 55. Okay, so I got a little bit more time in that expiration for that $55 covered call. But if I lose it there, it'd be like $4 on the net result. So still looking at volatility this week. And currencies, let's start with our dollar index. Let's actually go oil, dollar, oil, gold, silver, and then we'll get into some currencies. So US dollar, we are breaking the highs. And this is what I said prior to the FOMC. Is the dollar going to start that breakout? Okay, it looks like that is the case. So we have some levels right in here that the market continued to test. Let me draw a little box here. So we had some volatility and some fake outs. Take that line there. Copy and paste. All right, so this was our low to high range that we were watching. Dollar broke out last week. Again, broke out in a volatility type way, but we are elevated. Okay, so do I think that this is a good looking trade to be long the dollar? I do. If I'm long the dollar, I would have a stop loss. I don't want my stop loss to be down here below the swing lows. My stop loss is if we come back inside this range, if you have a bear flag, stop losses inside the range. If we go lower, we got to be ready for that reversal. But I don't think that reversal's coming. I think the market is doing everything it can to just price this in, price in all the rate hikes, and then the dollar gets weaker later. But this is also a fifth wave completion up towards 12,600 or slightly higher. Don't try to call the top in this thing. I think the best trade is we break out, we look for flags, we look for trend line breaks, and we trade this dollar strength with stop losses, right? If we make higher highs and higher lows, stop losses go below the recent lows. You follow this thing up to resistance around 12,600. So right now and this week, and maybe for the next, 2 weeks, maybe the next month, mid-March, all of April, all of May, we're looking to see what the pre-summer push has given us in currencies as well as in stocks. If it is a bullish push in stocks, that's going to be interesting because a bullish push in stocks doesn't necessarily mean that we have a stronger dollar as well. Normally the correlation is stronger move in stocks equals a bearish move in the dollar, but we could be in a unique situation where the dollar gets stronger just because they're raising rates, and stocks get stronger because we might just want to see the relief rally. But I have a feeling that if the dollar gets stronger, it's probably meaning bad things for stocks. And we continue to unravel with more of the kind of dominant bearish sentiment and the market uncertainty ahead with Russia, Ukraine, commodity prices going higher. Even if the Fed is raising rates, if they are somewhat dovish this week saying like, look, we're going to raise rates now. We understand inflation is bad and high, and we want to try to, fight it a little bit. But maybe they're only going to raise rates 3 to 4 times and be at like 0.75 to 1% by the end of the year. That doesn't really stop inflation, so the market could digest it that way. And this is why we're going to have a session on Wednesday. We're going to try to take some information out of the statement, see what the Fed is saying, take some of the highlights, and see how we're looking to trade it. All right, but I think right now we've got a breakout. I would be long the dollar. I like being long the dollar. Pairs I'm going to focus on, probably Aussie US dollar, New Zealand US dollar for right now, and maybe a short-term retracement, and try to get in, eliminate some risk. I mean, my goal on a lot of these dollar crosses, if this is going to be a breakout to the upside, and then trading those correlated dollar crosses, is you get an entry, you have a stop loss plan. If you're in profit, 20, 30, 40, 50 pips, move a stop to break even, let your profits run. If you want to protect it, look to get back in on some entries. You can use, any of your favorite indicators for trends, get back in on dynamic support or dynamic resistance, and have a stop loss, get into profit, move your stop loss to break even, repeat, until we get to, 12,600, 12,640, something like that before we're taking profit. So that's dollar. Oil, quite the roller coaster last week. We had highs nearly at 130, big decline on oil, 104.38. I still think oil is going to find a high volatility bottom. Now, I don't know where that is, of course. Like, we might come back and tap 100 even, and it's, straight up in this capitulation move, comes down to $100. Base is here, maybe corrects with some oversold conditions, and then oil starts to get elevated once again. So, I was not interested in calling tops on oil. I was just looking at, we were looking at currency pairs actually. EuroCAD had a really nice bottom last week that traders were long. We were long at 4,000, long at 38.50. We made like 400 or 500 pips on the EuroCAD. So we traded some instruments instead of trying to call the top on oil, correlated nicely with some of those currencies out there. And then, if we have this structure here, that was a bit of a broadening formation that we did not come back down. This past resistance now could offer some future support on oil right around $100. If $100 holds, I think getting long oil again is probably the play. Again, with a stop loss in mind, but come back after 130, right? We'll see if we have another rally on commodities, on energy, on oil. We're starting to see a lot of movement in gold. I mean, gold's back above $2,000 an ounce. So you're seeing that risk off kind of hedge and inflation play in the markets. All right, so that is oil, gold, and silver. So gold was up to 2080, and interesting spot. If you look at the highs, this goes back to 2020. August 2020 hit the highs, same thing, and retreated. Now, is gold permanently bullish? Doesn't look like it. I mean, you had your chance to protect some really nice profits up there around 2000 plus 2080 highs, and now we're retreating. So what we need to look for would be something like this. If gold has a sharp decline, does it decline? Does it base here? Does it start to settle in and then create a past resistance becomes support, start to form a bit of a falling wedge, gold gets a base and then maintains bid? I am curious, are we going to end up breaking these new highs on gold this year? If we do, that probably spells a lot of trouble ahead for stocks and a lot of trouble ahead for the dollar, which would be interesting how that plays out. Otherwise, it's just we hit the highs of 2020 right here. Gold, if it comes back down to breakout points, which would be all the way back around 1835, then we're looking at just a massive range. Now, I would get long gold all over again, anything around 1700 or lower. I'd love to get long on gold, right? But if we find something where past resistance becomes support, I think gold has a chance to create wave 1, wave 2, wave 3, wave 4, wave 5. That got a little exciting there with that capitulation move. And if we have a 1, 2, 3, let me delete all this stuff, it's getting noisy. So if we have a 1, 2, 3 wave correction, look for this to offer support, trend line break, and then look to get long again on gold. All right. So I am interested, like I said, buying gold on a dip, but probably looking for a 3-wave correction first. Silver, not quite as volatile. Okay, pulling back, we're at 25.30 on silver. Still like silver all the way up to 30 plus. We have previous highs in February 21 and August 2020, back up towards 29 to 30 bucks. So even a pullback on silver, I'm still buying dips. We've built really a really nice position here around $20 on SLV, around $21 on XAG USD, and we're trying to take it up to those higher levels for about a 40+% gain. Crypto, take a look at Bitcoin. We're trading at 38,793. Chart alarms are set pretty sideways. And as I mentioned the last couple of weeks with this analysis, are we looking at something like this where we're connecting highs and lows and we're trading sideways? I have this horizontal resistance. I have this horizontal support. So we might just be trading sideways. I know that, Biden came up with an executive order that is getting kicked around. It doesn't really change anything for cryptos. It's not, I don't really know what to make of it. It's just something that there's crypto regulation circulating within Wall Street, or not Wall Street, DC. All right. So all I'm really doing on crypto, same thing with Ethereum. I'm watching for highs and lows to break. I think we are somewhat vulnerable to the downside for something like this. You have more aggressive trend to the downside recently, and if this is corrective, okay, if this is corrective, we could have another push to the downside. Okay, we could. Now, we don't know that until we break 34,000. But if we just stay sideways, there's really not a lot of exciting trading going on. We're getting, a bullish day followed by bearish days. We're not taking out highs. We're not taking out lows. So we have to continue to watch. This week could be interesting. The dollar acts as a catalyst. The Fed acts as a catalyst. We could see what crypto does, bullish or bearish. So again, we'll assess. You come join me on Tuesday or on Wednesday for the live session. We'll see what price ends up doing for the day. All right. So that's Bitcoin. Ethereum, I didn't really have any notable alerts go off this weekend. Ethereum, same thing. Highs, recent high around 3063, recent high at 3285, recent lows, we are looking at 2314 and 2170. Not breaking highs, not breaking lows, potentially a wedge. Okay, potentially a wedge. But we got to watch it closely. We've had a recent downtrend. If this is a wedge, this could continue to go sideways, and then the market has to go and make a decision. Whether that decision is bearish, whether that decision is bullish, we don't know yet. So we have to wait. I do think there are some pretty attractive ones like Litecoin and Solana. Litecoin potentially a falling wedge. I think we talked about this last week in these sessions. So a potential falling wedge. I think Litecoin has some promise. We're seeing some way slower movement on Litecoin. But if we break, let's say we chop around here for a little bit longer. Once we break to the upside, I'd say Litecoin looks pretty promising back up to 160, 170, maybe even back to this amazing pivot cluster around 220. In fact, I would set my sights on this level if you are interested in, not necessarily buying and holding forever, but something where, I'm buying Litecoin around $100 and my profit target's around 220. That's an excellent chunk of profit there for over 100%. And I think that's a pretty good play. And I'd be willing to, take a small trade here at like 105, and then let's say from 105 all the way down to $0. Dollar cost average in about 4 levels, and wherever those get filled at, if we return to this level in this pivot cluster around 220, I think that's an excellent return. So let's say you take $1,000 and 250, 250, 250, 250, you can dollar cost average in. Maybe your 250 right here becomes $500. Maybe your $500 here becomes well over $1,000. See what I'm saying? Like, there's ways to trade it. You don't have to put all your risk out at $105. So, but I think there's some technical promise to this one once we get on the right hand side of this trend line and start breaking this wedge. And then Solana is hopefully going to do something very similar. We're not on the right hand side of the trend line yet, but looking at this type of falling wedge, and we get on the right hand side of the trend line, we start to head back up here. We've got a nice little pivot cluster, weekly and monthly, yearly as well. Nice little pocket play around 170. So if we're trading at $80, again 170, that's another 100%. So dollar cost average in every maybe $20 and get a nice return towards 160, 170. That's not asking for Solana to go to the highs, right? That's just coming back and finding some type of balance. So could be interesting. Okay, so that's some crypto stuff. Let's get into some currencies. Do you have any requests, whether it's stocks or options? If anyone's with me in Equities on Demand, we have a ton of expirations we'll be talking about today in class and all week. A lot of management this week. As far as our currency strength tool, this is today's currency strength. We see the pound creeping higher. The yen is the weakest with the Aussie, which is an interesting combination to see those two being soft. The euro still on that nice recovery from last week. The Swiss is baseline with the dollar, New Zealand and CAD all neutral. Pound and euro creeping up higher today. Of course, happy to see the euro doing pretty well. I am, long euro dollar right now, long euro Swiss. We had some good profits last week on the euro CAD. So we'll see how that continues to play out. I'd still love to see, the Swiss across the board do pretty well. Also, there was an interesting breakout last week, and we talked about this, was the dollar yen. Okay, I was reluctant on the dollar yen to get short. Okay, we have an awesome bar count in alignment, and here we are getting this breakout on the dollar yen. We're trading at 118. Now, I have a pending sell at 118.45. So 118.45 is a pending sell on the dollar yen. Now, take a look. You don't have to take this trade with me. This is just one thing I've got in my Forex pairs. On the daily time frame, you can go back to this high in 2016, right? We had this crazy big, it was coined the Trump trade back in 2016 post-election. Dollar yen went from essentially parity, just around 100, all the way up to 118 and change. Now, we hit that high. We've come all the way back down, retesting those lows once again. We're back up. So I'm going to have a sell trade at 118.45. It hasn't been filled yet, but a couple of things I'm after in the short term. We have a fantastic breakout point right in here. This also blows off the highs of this rising wedge, which probably pisses off some retail traders that are trying to short this thing. So I'm trying to sell it at the highs with overextended conditions, and we also have a pretty amazing bar count where now we're getting up to 300 bars. So take a look. We're heading into nearly overbought conditions on the dollar yen. We don't quite have divergence yet. So I'm not saying that 118.45 is going to be the top. It's probably not. We might end up cruising higher into 120. Round number. We might cruise higher than that. You have to look at an aggressive trend line. But I will say, based on the bar count and what I've traded before with my right trader system, I think we're going to fall back down. I think we're going to find this daily 200 exponential moving average with a yearly pivot combination. So I'm way more interested in when this thing is done going up. I'm looking to fade this all the way back down to that 200 EMA. And that could be, hopefully, the distance of like 400 to 500 pips. I'd like to have some stacked trades in here to the downside and turn this dollar yen into a really nice profit. So I'm going to start with a little test at 118.45. If that works out great, cool. We'll start there and we'll make some money. If it goes up higher, probably sell it at 120 or so, then start looking for trend line breaks and confirmation, start adding and building a position around that dollar yen. So this is going to be one of my, radar or watch list trades this week for dollar yen, because I think we're finally doing what I expected. I thought we were going to surprise the retail crowd by going a little bit higher, making that breakout run to 120 or so, and I'm going to start dipping my toe in the water at 118.45. Okay. Sharon, sure. AG's asking about Litecoin at these levels. Like I said, I would buy Litecoin, yes, if you want a dollar cost average. $105. If it was 105, 75, 50, 25. I mean, I'm not saying Litecoin's going down that much, but I'm saying that if that was my risk all the way down to zero, I would dollar cost average in and know that my upside target's around $200. Okay, I'll take a look at some of those requests. Euro dollar, pound dollar, Sharon, sure. So euro dollar is trading at 109.51. We haven't broken lows yet. I think the euro dollar is vulnerable to the downside, targeting Apple. All right, so I got lots of chart alarms coming in here. Freaking A1 OKTA is kicking my butt. 42.50 on SLB, Apple down. All right, so I have some trades getting filled right now. Chart alarms going off. All right, I'll come back and digest that in a second. SLB, I'm going to have to get some covered calls in on a few of those to revisit. Campbell Soup and SLB for starters. Euro dollar. So we had a recent low around 108. If you look left on the chart on euro dollar, that gets back into this big breakout point back in May 2020. I think we are potentially looking at, if the dollar index continues to go higher, then you're looking at euro dollar threatening this 105 support. Okay. So from a wave structure, if this is wave 1, 2, 3, 4, 5, right? If we're done with this wave, we should be looking for a correction on the euro dollar. But of course, sometimes you pick bottoms, you wake up with smelly fingers. So I think that the euro dollar could continue. If we have this is still trying to finish its fifth wave, we might still finish down at 106, down at 105, and then we look for that three wave correction. So I'm not calling the bottom here on the dollar at 108. I think it's a good structural level with all this past support. But if you look further left, there's 105, which is massive support. So if I'm looking at building a position, kind of calling lows, that would be where I'm looking to build and call the lows. All right. So this week with the Fed, I'm not looking to step in front of it. I do have some long positions on euro dollar, and I'm looking for the euro dollar to head back to 115, 116, 117. But to get there, that's going to be a moving target. If this is my profit target around 115, 116, and we go all the way down to 105, well, I have no expectations of like, oh, it's going to come all the way back to 115. I mean, if this goes 1, 2, 3, I want to be out of this trade with profit. So that means I'd be looking to position myself more to get in lower around 106 or 105. Right? So summary on the euro dollar is this. I don't think the bottom is in at 108. It's going to be a really interesting week to see how the Fed plays out, what price action does, weaker dollar, stronger dollar. We don't know yet. Okay? Because look, the market is expecting and pricing in a rate hike, but we don't know if the market's trying to price in future rate hikes. If the market is looking at the Fed like they're going to be hawkish or dovish for the remainder of the year, I don't know, and neither do you. So we watch price action, we trade accordingly. I think the dollar could still get stronger this week. I think the dollar index is pushing momentum higher. So that being said, I think euro dollar is potentially vulnerable to revisit 108 and possibly find that stronger support, which is multi-year levels around 105. Right, and that would be where I'd say, okay, I'm putting more of like my foot in the sand. That's where I'd be looking to kind of draw the line and get long and get a little bit more aggressive on catching some lows and bottoms on the euro dollar. Okay, all right, pound US dollar. Pound US dollar, we should already have been taking profit. If traders are shorting with me around 135, 1.3500, we had a nice breakout. Shorted this all the way down to 132. We've actually gone down to nearly hit 1.30. Okay, so 1.30, nice psychological number. There is also a yearly pivot sitting right here on 29.50. So again, case could be built where this level, that yearly pivot, ends up getting tapped, and then the pound dollar responds to the upside. So, am I looking for major turns on the dollar index? Not necessarily. Okay, so I said this to traders last week. I'm not interested. Son of a gun. Chewy, I think I took that long put already. I've got chart alarms hitting to the downside right now, so we've got a pretty bearish open from the looks of it, I think, or just maybe my some of my stocks are just getting hit. We've got red on the candle for the SPY, red on the candle for the Dow, and red on the candle for the Qs. All right, so the Qs looks like we have a small gap to the downside. What was the one I was just on? Pound US dollar. Pound US dollar. So we're trading at 30.50. We have a yearly pivot right here. I'm going to set a chart alarm and see if this acts as a bounce this week. 29.21. I'll put this is the 2021 yearly pivot and potential support. Okay. So is this going to offer, from this high here, is this offering support? I mean, this could be stretching a little bit further. Find this low. Maybe this offers a bounce back up and you trade the channel. It goes back to 3,300, go back to 3,400. But that insinuates that the dollar is going to have some type of topping pattern. And like I said, I'm not interested in calling the tops or bottoms on some of these pairs. Not yet. Okay. So all I'm saying on the pound dollar is if you shorted with me at the top of resistance, you took it down to support, you took your profit. You're done. I don't have a trade on pound dollar right now. If we do come in this area, I'm looking for support, but I'm not catching the bottom. I'm not guessing. All right. If we have a major turn on the dollar, then we can start getting positioned. All right. What else do we have? New Zealand dollar, euro pairs. Okay. Let's take a look. So let's go New Zealand US dollar. New Zealand US dollar. So this one, with the yearly pivot still available, the yearly pivots are on 7,000 on the New Zealand US dollar. We have this nice channel as well. Again, we took out this recent high. If we have a little bit of a correction going into FOMC, if we get a weaker dollar, guess what? New Zealand dollar is a great looking trade this week. If we have a weaker US dollar, let's say that we can sit around like 68 or 6,700, that high or low, and we can make a nice little swing up towards 7,000. I could see Aussie dollar and New Zealand dollar getting strong this week if the dollar turns weak. All right. But again, I'm not calling that because if we come all the way back down to the channel lows, I'd rather start getting, if we have a push lower bear flag, I'd rather short New Zealand dollar and trade the current momentum back down to these lows. But if we see prior to FOMC on Wednesday, the market's pulled back like so, and then FOMC or after, so Wednesday afternoon into Wednesday, Thursday trading, if we're starting to see a weaker US dollar, then New Zealand dollar looks great, back up towards 7,000. Again, it doesn't do any structural damage. This is still the same channel we've plotted here since the high of February 2021, and we have high to low, lower high to lower low, lower high to lower low. So we're still in this big range. But I'm curious if this is a swing where it's up, pull back a little bit, head up to channel resistance, and that's a great profit target. From there, we might come back down. But stay within the structure for right now if that's what we're getting. So I'll switch over to Aussie dollar because you're going to see something pretty similar. Aussie dollar hit the yearly pivot. Okay. And I can do the same thing here with some of these trend lines. So we have Aussie dollar right in here. So like that, a little channel action, yeah? So we came back down here to the yearly pivot. We hit it. We came back up to this year's pivot. We hit it. So this one has to figure out, are we going to have this low to high? Are we going to make another run to the upside? There's a lot of open space in this Aussie dollar. If we break above 7,400, there's room to get back to 78, 79, even 8,000 to retest this high from February of last year, right? But if we stay inside the channel, we have high to low. If we have a bear flag, stop loss outside the channel resistance, and you start targeting that 7,000 low again, and maybe even target, this pocket back into that COVID breakout around 6,800. I'm not sure yet. So a lot of indecision that I'm trying to, navigate on the dollar crosses. All right. Pound Aussie, we'll take a look. Sure. Pound Aussie, yep. Pound Aussie. So like I said, with the rate decision this week on the pound, one thing that I would like to do, it's already starting to fudge. Pound Aussie is starting to head higher. We talked about this last week in Flex. I was interested in trying to buy this thing at the lows if it was going to extend just a smidge lower. Let me go horizontal ray here. So I was looking for this area of support. I'm just going to go further left. Yeah, there's just a strong level support here around like 7,400. And I think in the near term, here's probably what will have happen this week. So we have this high. We did take a great trade on the sell side. We sold the neckline. We sold the trend line break. Came down to the yearly pivot. It exceeded the distance that I thought we were going to move, but that's fine. It was a good trade for everyone to make some pips. Now we have a pocket, a weekly pivot. We've got all sorts of levels. Just draw a fib from high to low and look at like a 23 to 38% retracement. So if that's all we have, we still have some room to get back on that trade. So take a really simple swing right in here. So from high to low, okay, and we have a 8094 retracement target. We have an roughly 8300 retracement target. So I think this week pound Aussie looks pretty good to the upside. Again, pivot cluster right in here, 8172. We also have those retracement targets on Fibonacci's. So that I think pound Aussie looks pretty promising this week. Same thing on pound New Zealand. Likely pulling back into this big pocket candle right in here around 95.02. Okay. So I was, again, hoping that we would have a little bit of a, retracement coming, but it would be at a better price for us to buy it extremely low. Looks like we're just kind of turning nowish. So we find this weekly pivot, find some pockets. I think the pound New Zealand continues to go lower later, but we might have that short-term rally to kind of price in that little rate hike from the Bank of England this week. Okay, so I like that. Pound Aussie, pound New Zealand look pretty promising to the upside for some near-term retracements. Pound CAD probably doing something very similar to that. We had lows around 6,800 and 6,600. We're trading at 6,650 right now. And again, we could have a nice son of a gun, man. I'm just getting chart alarms just bashed to the downside right now. Deep breaths. 167. Yep. So I told traders this on the pound CAD. If we break pound CAD around 6,600, I don't want to be holding long positions. All right. If we break, retest, and we go, this pound CAD can continue to go lower. Now, oil obviously took a big reversal where we went from 130 down to 107. And that put a little bit of the brakes on pound CAD and euro CAD, but the pound is not quite recovered yet. If I'm looking at the three of them, pound Aussie, pound CAD, pound New Zealand, I think pound Aussie, pound Aussie, pound New Zealand are better trades right now than the pound CAD. That's my opinion, right? So if I'm going to choose to trade, I'd take pound Aussie, pound New Zealand over the pound CAD right now. Okay. Dustin Jordan, 92.90 target for dollar Swiss. 92.90. What are you looking to short it right now? I mean, I'm looking for this thing to go up, man. I hope dollar. I mean, look, if I'm going to see the dollar get stronger, then might as well be dollar Swiss all day long to the upside. So we're trading at 93.50. These are some. I mean, I have this thing surrounded, so I'm long on the breakouts. Okay, I'm long on the pullbacks, and my target is up here at 96 plus. Is this a week that it just continues to drive the dollar higher? I don't know. If it is, great. This is going to be an awesome trade. If it's not, then this is going to be resistance holds. Dollar gets weaker. We see recovery across the board. We're long Aussie dollar, long New Zealand dollar, probably long Euro dollar, and I will just continue to hold my dollar Swiss. Okay, yeah, I'm long dollar. I'm long dollar yen, or I'm sorry, dollar Swiss. I'm long for sure. And I'm up. I mean, probably for my base position right now. Let me check. I'm probably up a couple hundred pips, but I'm not taking profit yet. I didn't build my position back up nearly as big as it was before. I'm currently up around 75 net pips on 8 positions. So I want to keep stacking higher. I've got orders above all the way up to like 9,400. So if we break out to 93.75, 9,400, I've stacked a couple more orders to the upside, and hopefully that is free and clear to head up towards 96, 96.50 and run with this thing for a while. Okay, and if we have any pullbacks, I'm buying dips. But we will see. Another one that's looking pretty good on this same type of trajectory is potentially CAD Swiss. CAD Swiss at 73.35. Now, oil is going to be a bit of a factor here, but man, I would love to see this CAD Swiss make its way up through these chart alarms and get to 90 or 74.50 to 7,500. Something in here, 74.50 to 7,500. Great spot to take some profit. I hope there's more to it than that, and it doesn't just stop there. But I do respect the structure right here. So if this is equal lows, we have a little bit of a push that's coming on CAD Swiss. Hopefully we get to 75. Probably going to take some profit there. Although I think that this wave 1, wave 2, wave 3, we could have a big push coming where this could be wave 5 that channels its way up towards previous highs. There's a massive pocket all the way back to 2015 between 79 and 8,000 that if I had a long-term target on CAD Swiss, I'd love to hold this thing towards those highs. But I built up a big enough position in here over the last several months that I'm probably going to take some profit between 74.50 and 7,500. Okay, good stuff. Yen has been weaker. So Swiss yen right now, I'm probably going to sell it again here at 127. Looks like my chart alarm's expired. So check for entry here, 127 highs. Check for sell high. Set that chart alarm on the dollar yen. I'll start wrapping up here for just a few minutes. Dollar yen's 117.96. Set a chart alarm at 118.40. Check for fill. 118.45. Check for fill. And I'm going to check some of those pound pairs. Pound New Zealand. Yeah, just a really, a nice bar count on the 1 hour chart. I'm going to see if I can get something like this. We'll talk about it this week in Flex. Pound New Zealand 1 hour time frame. Rather than trying to jump in right now and chase this thing, maybe we can see the market come back down to this low. If we have this really nice stretch away, we go up, we go down, we go up, we go down, maybe something like this. Maybe like a falling wedge, we can get position at the lows and then see this thing pop back up around that Wednesday rate decision, or Thursday rate decision rather. So I think I'm going to put a pending buy 90.50. I'm going to go 90.65. Pending buy 90.65 on Pound New Zealand. So start with an 04, 90.65. Buy limit 1.9065. That's just off those recent lows. And get that expiration out there. Okay, so 9065 off those lows. And then pound Aussie. Same thing here. 4 hour charts up. Pockets are up. Daily candle. We could be, I'd say, pretty easily coming back to like 81.80 on that pound Aussie. This one, same thing. I'm not going to chase it. I'm going to try to buy off the lows. And those recent lows are around 77.76. I'll put in a pending order on pound Aussie. Oops. Dude, type it. GPB. Oh my gosh. Try to buy at the equal low. So this is what I'm talking about. And again, I might miss the trade. If this continues to go up and finds this, weekly pivot cluster, then I'll cancel it. But if we get a chance to buy the lows, I'm going to buy it low, target that pivot. So that low is going to be around 70, 7,800 or 77.75. So I'll put a little test in here. That low's around 78. I'm good with that. So pending buy at 7,800 on the pound Aussie. So new order, same thing here. Buy limit 1.78. There we go. So pending buy. So I'll check those out. Pound Aussie, pound New Zealand, I like. I will watch this. If they go higher and I don't get filled, then I'm going to cancel those trades. All right. Let's see here. Euro yen ready to sell? Possibly. Euro yen in the higher time frame, we have some channel resistance. I don't know if this is the same chart. I'm not going to sell it this week. I'm not selling it right where it currently is. It's right in the middle. We could have this low to high, a little bit of a pullback here. Euro yen might be ready to buy off these recent lows. If I'm looking to sell the euro yen, it's because of this resistance, this resistance, this resistance. I'd be selling it back up here on 132. So in the middle of the range, I'm not going to touch it. It either pulls back for a buy trade or we rally up higher to sell it higher at 132. So that one's not really in a position for me. Anything else? I'm going to wrap up here in about 2 minutes. 9,200 take profit. Dustin, I don't think I don't think that's right. 92 might be an entry. We should have a profit level like 96, 96.50. So let me go to my trade log here for Flex, find the dollar Swiss. So dollar Swiss. We have our buy trades here. Where else? Buy trades here. 92.90 if you want to take some scalping profits, which again, if you want to take it there, 91.05, if that's profitable, yes. Otherwise, I mean, I'm changing this thing up. If you're going longer term with me, 0.9600 or higher. So this has been, it's a big like position trade for me. So if you want to take profit and scalp it, then yeah, 9,300 is a great spot, 9,350 resistance, and you could be out. But if we break above 9,350, I'm along. I'm staying long, 9,600, 9,650. So stay with it. Yep, same. All right, cool. All right, good. Any other questions? So like I said, remember, we're gonna have a little special week this week for the YouTube channel. I'll be doing a live session on Wednesday at 2 p.m. Join me. Let's trade FOMC together. We'll have the rate decision at 2 p.m. We have the press conference starting at 2:30. So we'll look for the language, right? What are they saying? Are they projecting the right thing? 97% probability this week the Fed's going to raise rates by 25 basis points. It shouldn't be shocking. The market's been kind of digesting this nonsense for the last couple of months. What we're going to look for with the press conference and with the statement is if they hint at how many rate hikes you're going to have this year, right? If they're, again, maybe the market is like saying that the Fed is dovish enough right now that all the bad stuff and the bearish sentiment's been priced in inflation, priced in rate hikes, priced in the rate hike cycle. And if the market can look past this Russia-Ukraine stuff, which I know right now it really can't, but it's trying. And I think that's where that potential, short-term relief rally comes. But I think we're going to have a heck of a time. I mean, we're in the hole all year, right? I said year to date. If you look at our indices right now, this is year to date for every major market or every major index in the U.S. 18% in the hole, 12% in the hole, nearly 10% in the hole. If the market's going to find a way to produce positive gains this year, I mean, you're looking at like a 20+% rally, 15+% rally, 10 to 11% rally to get there. So, I mean, the market's got its work cut out for it to get to green territory this year. I don't know how it happens. I think the market can put up a good fight, but to break highs and stretch to new highs this year, we have to get through this geopolitical nonsense that is just weighing on the markets. So we'll find out. But like I said, bonus session on Wednesday, 2 p.m. Eastern time. It'll be right when the news comes out. We'll get right into it, start digesting the language of the statement, and we'll probably be around a little bit long enough to see, when the press conference starts, any type of language that Jerome Powell mentions of what the news is throwing out there for real time. All right. Power Wash asking about New Zealand Swiss. No, I'm not selling New Zealand Swiss. I'm looking for a dip to buy. New Zealand Swiss. This is a long trade. I was long, in here on the trendline break, stack, got long, took it up to this pivot cluster and that yearly pivot. I'm out of this trade. So I'm not short. What I'm interested in now is looking for this. Do we have a pullback on New Zealand Swiss? I'm looking to get long again to target the highs. So I'd rather use this momentum, use a pullback, look for a trend line break, and then buy New Zealand Swiss again. Part of that is because I have a big play on the Swiss this year with the, kind of a basket prediction. All right, sounds good. All right, everybody. I'll let you go for today's poll report. Remember, Wednesday at 2 p.m. for a special session for FOMC. Same time, same place. Friday at 9 a.m. for the weekly recap. Monday through Friday, equities on demand. I'll see you in class here in 10 minutes. We got a lot to talk about this week, a lot of management, and then flex Tuesday, Wednesday, Thursday, as usual. Okay. Thanks, everybody. Let's have a good week. It's going to be a crazy one. Looking forward to it. See you. Bye.